Hi, and welcome to Magic Scanner website, a fundamental stock selector for KLSE and SGX financial market. You're about to learn the secrets to raking in double to triple digit return per annum in trading or investing, no matter how much time you've had to prepare. It doesn't matter if you've never had any past experience or education, this Magic Scanner will tell you everything you need to know without spending too much brain power. This is unlike any tool you'll find out there. It's the edge that most analysts and fund managers want or have. Go ahead and get yours now.
Friday chart clinic for week ending 4th of January. Today we have an interesting topic. One of them is just to talk about some of the premium membership new features that we have and the new menu layout. Second is also just to give you an update on our January 14 foundation course that we're doing in our office and some of the benefits are. And also we'll be doing our first Traders Club meeting this Saturday, actually tomorrow morning at 10 o'clock, okay? At 10 o'clock at our office, and also to give you a bit of an update on the alright, I got you, Hussein, okay, on the case study on my stock case pick that we have since I've talked about the stocks pick that I have since January, and also this is the SS submit stock for analysis that we have. Okay, first of all, before we do that, Bill's with me here. We get him, our US correspondent as well as our gold correspondent here, to talk about the advent of the US fiscal cliff. Okay, here you go, Bill.
Okay. I can just talk into this thing, right? Yeah. Okay. Well, I'd like to welcome everybody today, and I hope you guys have a very happy and prosperous New Year going into 2013. And we'd just like to report on the fiscal cliff, and it was as we had forecasted. They would come to an agreement in the last minute, because the way it works is in the U.S. you have two political parties. One is the Democrats and one is the Republicans, and they fight like hell in public. But in actuality, the reality is they're all good friends. And they're like the wolves going into the chicken house. And they go in there, the chickens are the public, and they go in there and they have a good feast on all the chickens, and they smile and they laugh and they get along very well. And in the end, they come together. So as a result, there was a tremendous amount of fear in the market and panic and doom and gloom. But Martin and I, we didn't sell any of our shares. We held on. Because we hold good quality companies, so in that way we did okay. Now let me report a little bit about what I think may happen in 2013. A little bit of a forecast. If you took, and this is some research from Lee Cheng Hui's head of research from Maybank, and he came out with a report a couple of weeks ago. It was quite interesting, and he showed that the dividend shares in Malaysia and Singapore outperformed the growth shares, the second board shares, the small caps and the mid caps, and they outperformed by over 8%. So people ask me, well, why did this happen? I asked Lee, well, why is this happening? And he said the reason is because we have negative real interest rates virtually in every country in the world, where inflation is actually more than the fixed deposit rate that you get. So that is happening is forcing investors to seek comfort in income and income-producing shares. So this is the reason there is an exodus into the dividend-producing shares. So at least they're getting some return. Now, interesting, UBS did some research as well, and they came up with the same thing. And they feel that because this coming year, 2013, the liquidity, all this money printing, is going into solid companies, is going into solid shares to get an income return. So it shouldn't be any different in 2013. We continue on with the same strategy. So the other thing is this, we have to be careful about something too. And I'll pose something to you which is quite interesting. there's an old metaphor in the stock market, trees growing into the sky. That means shares that go higher and higher every day, parabolic rises. They go up and up and up, and everybody is chasing these shares, and the brokers are all recommending, and the retailers are jumping in, and it goes higher and higher. Like Apple went over $720, trees growing into the sky. So do you invest your money, allocate your capital into trees growing into the sky type shares, or do you bet on reversion to the mean? Reversion to the mean means that markets will find the real value, and in fact, if there's a panic, they will be undervalued, and that us, Martin and I, as value investors, we look for quality companies who have reverted to the mean, and then we pick it up. And we just did this recently with the Raffles Medical Center. There's a little bit of a hiccup there as it was approaching the old high. There was very good absorption. Sellers couldn't push it down. There was some bad news that came in. I don't know, maybe one of the patients died on the way to the hospital. I don't know what the bad news was, but it actually came off a bit. So we picked that up for all of our Singapore managed accounts. And the beauty about the Raffles Medical Center is it has a history of increasing dividends over time, and their sales returns on equity have continually improved. So I would say over time we should see increases in dividends.
And the Singapore Raffles. You can see here the Bolstead chart.
Okay, we also have picked up the Bolstead that was a few months ago, Bolstead Singapore, which is a completely different company than Bolstead Malaysia. It is a different management, a different business model, and so we discovered this. Yes, we discovered this using our Magic Scanner, this share, as well as the Raffles Medical Center share that was on there. And this is a very objective way of finding companies that perhaps the crowd is not looking at. In fact, I am sure that there's some top analysts in Malaysia who have a similar thing to Magic Scanner. They've had their programmers develop this thing, and when they come out with good shares, they do not recommend it to the retail clients. Those shares are kept for their favored, for the elites, for their favored customers, but now we have the Magic Scanner. We can get what they get before they recommend it to their high net worth clients. So in any sense, this is what we do in managing our accounts. We've come up with this thing. We're very excited about it. Now here's the thing. The beauty about the Magic Scanner is that you can set your own parameters. For example, if you want shares paying more than a 5% dividend, you can put that in there. If you want more than an 8% dividend, you put that in there. If you want a return on equity of 15%, you can input that. That means not everybody gets the same results. The results are based on your needs and what you want to do, how you want to invest. So we have our own proprietary formulas and models for finding shares for our managed accounts. And that's that reason that not everybody gets the same shares. But in any case, I do hope you come by tomorrow. And we have our new associate who's joined us recently, who's going to do a great presentation on the DNA of the market. And I think that'll greatly interest you. So having said that, one other thing, some of you are asking about REITs. Okay. Now, last year, REITs in Singapore were up over 37%. The yields are really compressed now. That means you can get a bond yield that's more than what they're giving you on a REIT. And here's the issue. If you buy a REIT and it keeps going up, yes, you make money. But if it reverts to the mean, you're going to have a big capital loss. So I was talking to Mr. Ang Kok Hing, the Chief Investment Officer of Phillip. He's just told me this morning. He said, if you really want income that is safer than the dividend from a REIT, buy the bonds from the REIT. Because that way, at least you get your capital back. Now, if interest rates go up, you're going to lose money. But I'm not recommending that you do that. But REITs is something that all of the retailers and crowd is chasing right now. Yields are very low. And you may have a reversion to mean, just some hiccup in the property market, and you might get badly burned. Okay, with that, I do hope to see you guys tomorrow. Please come by, and I think we'll have a really great presentation for you. Okay, Martin? Okay.
Alright, that was our US correspondent Bill, and just an update on the rates. Nobody know US better than him, as we all know that Bill used to be from US, and he's been living in Malaysia for the last 15 years. So tomorrow our Traders Club, we're doing it in our office. If you're in Klang Valley, do drop by. We'd like to see you all, and we can actually discuss further. Alright, the next thing I want to talk about is the new menu layout that we have in our screen here. So the old one tend to have a lot thing, and we are really doing touch up on our website here. So you can see there's a magic scanner here, and if you once you log in, you can click on that. So that's a magic scanner. You can see. Is my sound coming okay so far? Alright, I just wanted some response. Is the sound coming in okay so far? Right? Is it coming alright? Okay, good. Thanks a lot, Callme. So you can see this is a magic scanner. The Singapore site will be up very shortly. This is a SGX. We're still under construction here. We're still creating them. You'll be available to all the premium members in there. So if you are thinking of getting hold of the magic scanner, sign up for the premium members up. And if you do want to sign up, it's under the subscription fee here. Over this site here, why subscribe at all? And you can see the difference between the light membership and then the premium membership. Okay, you can see the difference between here. So that's ordering button in here, and we do treat you a bit more different when you are. And also a little bit on the ad side, we are doing our foundation course on the January 14 and 15, and this is what you'll be getting and also this is a Friday clinic that we do it live. This is almost every week. Myself and Bill is here to really, and also the course notes, which is worth 350 bucks ringgit in here. You get a set of course of notes. You get 2 books, myself and Bill's book in here, which is worth you combine that another almost 80 ringgit, plus the trading MetaStock software worth 350, plus the historical data, and more importantly is the gift number 6, which is the TAWA report for filtering stock. Now remember, this is a technical screener for screening technical stocks, and if you combine that with a magic scanner, you really have both fundamental and technical aspect of it covered up. So don't wait anymore. If you really consider it, come to our foundation course. For those of you who have attended before, you can resit this course. Just send an email to Bill or myself and say that you attended, you'd like to resit. And resit is FOC. It's free. We don't charge it. Although we do charge for the lunch, actually. Just a small minimal fee for the lunch. Okay. Because we're ordering some lunch in here. Okay, so that's for the foundation course that we do. And this is how we teach people how to invest and trade in the market. Okay. So that's on the side of the the Traders Club. A presentation will be done, and this is the one. I hope you all can see this. This is the DNA of the above average return of the KLSC that we'll be doing tomorrow. And the speaker for tomorrow is my intern. His name is Kwan. He's just going to do a short. He will tell you what is it all about. Okay, and this one slide that you can see here. Maybe I can just let you view it. What is expected tomorrow? Maybe Kwan, you can tell them what is expected tomorrow here for this. Okay, Kwan. Your presentation.
Hi, good morning, people. My name is Kwang. I'm Martin's intern for about a month now. This is part of my assignment as an intern. I'll be talking about DNA of above average return on KLSC stock market. There are around, as you can see, there are around 900 plus companies in KLSC stock market, and about 41% are making negative return in the year of 2012. And there's 27% making above average return, with 10% making super return. Tomorrow I'll be talking more about the components such as the PE ratio, the debt ratio, and the ROE that are related to the year-to-date return. And yep, that's all.
Thanks a lot. So we will be looking from a fundamental standpoint, actually the DNA, how this will work. So this presentation for tomorrow will not be recorded. So the whole point is to come here to get you guys feedback from. So that's one of the benefit too. If you are a like member, if you wish to attend, let me know, because we actually keep this especially for the premium members and also for our graduates. We want to make it because we have a very small facilities in here. We can't cater to everybody. So for those of you who do want to come, please let me know. Okay, that's the slide. Okay. Okay, next thing on my agenda is the year 2012 stock market report. Now, for those of you who is in the premium members, you are able to see this. Let me just bring out my slide here. Yep, you were able to see this on my January stock market report. The premium members would able to read the full thing. I'm not going to go through it because I'll probably do this tomorrow just to give you an update what I think about it. But particularly pay notice on my so-called outlook for 2013 in here. Also aligned with Bill, we are still very bullish about the market. Can you give a percentage for those outside of KL? I will tell you. Okay, good of you. It's going to be tough because of the logistic wise. For those outside KL, we might consider something else because the whole point is able to really talk to you, see you face to face. We will try to get around the outside of KL area. Okay. Next thing, this is the outlook. But what I want to pay attention is the stock report that I recommended since beginning of this year. Now, Bill, you should take notice. These are the stock recommendation I've given out since January until next year. You could see all of them did very well. In January, I recommended Telecom, DG. That has performed 34%, 47%. Now, remember, some of these stocks, you may have picked it up. It may be featured in some of our clients' portfolio. Now, these are all dividend paying. You could see here the dividend yield. So if you take this is roughly about 8 to 10% return, which is also the expected return we have achieved for year 2012. So any one of you bought any of these stocks? Just interested? No? Yes, the session will be in Jupiter. Okay, so you can see Manual Life, we have a 10% return. LPI, we have about 7% return. ECS, if you up to today, is about a 13% return, and it was recommended at the time when we did the trade in May. The only disappointment we have so far was August is TDM. Okay, that was down 24%. I'll actually have the details in why we did badly, but not so much. Now on the Singapore side, since we started to cover this, in July we talked about ComfortDelGro. We recommended that. That was a 35% return. Singtel in August actually fell back a bit, just a 5% down. But what we are still optimistic of it because of the 2-year revenue growth that we see here, about 11% here return. In September we talked about Capital Mall, and just since September the return has been tremendous. We have about 37% return. M1 Mobile, October, it's only been 2 months, so it only moved up about 1.5% return. But RI Assets as well as Viacom, which is the sister company of ComfortDelGro. Now remember, all ComfortDelGro taxis has to go for inspection every year, just like Puspakom in Malaysia. Now think of it, where do they send it to? They send it to Viacom. That's right. So if you buy ComfortDelGro and you think the taxi business will do well, and look at the dividend yield that pays about 4% yield, and it still has a very good growth, about a 2-year revenue growth, about 8% in here. All in all, since October, November, and December, this stocks hasn't moved much yet. But given time, like what we did for the January, since January in here, you should have a good return around the 10 to 12% return in here. So what do you think of this list here? Are there any of you all actually invested some of this list that you have? Now these are the year 2012 monthly stock pick with dividend focus. Okay, we actually focus this on the dividend. And going into year 2013, with the tools that we have for Magic Scanner, we are able to pick up even some better stocks going ahead. Also, if you look at the January 2013 stock market comment pick that I have, I've listed, you can actually check it for the premium members. It's right below here, I believe. Just show you where it is. Okay, some of the stock pick that I have. Okay, you can go through here, some of the stock pick in here. This one here. Okay, you can, it's actually in there. Just check, go in and check it out. And if you have any comment, just let me know. For the 2011, I was going to show you back the review back, and the list that we have in 2011, the stocks that we talk about. I'll just show you my Excel spreadsheet that I have, which is, I find it very interesting. Was this 2011? If you have held on in December, 11 I recommended JTI, Pet Dark, and we held on until now the entry price. You will made a Pet Dark about a 45% return from December 11. The best one we have so far was really GAB, Guinness. Well, we already start buying in October 11 at $9 now. It's about $16. That's almost a 68% return. Only FNN hasn't done really that well, but the Singapore side has done very good. So Public Bank, Hectare rates, all this return very well, with the exception of YTL Cement. However, having said that, the dividend that is received still compensate for the lack of the market. But then again, if you average it out and you buy some of these consumer stocks in here, and even Kenju today started to move. I think it's about 220, 230, it's up to about 10% in here. So that list has been great. Tasco was really a good winner and holding. Now the key message takeaway is the ability to hold it through on the fundamental reason in there. How many of you actually held your investment longer than a year? Right? How many of you held investment longer than a year? Okay. Okay, a few stock. Good. Okay. So having said that, I mean, if you have this list and you subscribe to a premium subscriber and you were to follow this portfolio that we talk about, you shouldn't do so bad. Okay. So you shouldn't do so bad. And if there is any problem, you find that you've been buying this stock but not making money, come and see us, or perhaps you want Bill and myself to help you to point you in the right direction and able to manage it. Okay. Yeah, with the exception of TDM, that's the only one that isn't doing that well. All in all, the stock pick that we have on our monthly stock market did pretty alright with the dividend focus. Okay, so you can see the average dividend yield that we have here. It's around 4%, around the 4%. So if you go to your magic scanner and key those dividend yield between 4 to 9%, like what Bill was saying, pick those that have very good return on equity. And this is what the presentation is all about, the DNA of the above average return. So what we want to see is how do companies perform well with this criteria. Okay, so if you have this criteria, the building blocks of above average return going 2013, you will do well too. Okay, so it's all about a game of statistics. We are looking at it. Okay, so rather than just looking at the day-to-day news and worrying about whether to do that, look at the returns on equity, look at the profit margin, look at the dividend yield, and then you will get the kind of return. Do what I say this make sense? Okay. How many of you don't have a clue what I've just told you? Because the reason why I bring this up, I've noticed a lot of people didn't make any money at all. So I wonder why. How many of you have no clue what I'm talking about? Alright, I'd like to hear some feedback. Okay. Okay. Alright, since you cannot record a Saturday, you just hear the outstation premium brief. Yeah, I'll probably do that too, okay? As a matter of fact, for Pixie, we would write a report. Sometimes very hard to me to do the wrong thing. I would write a report on the DNA. It will be available for the premium members to download it. That will be happening in a much later stage. So once we compile the data that was compiled by my intern Kwan in here, we will prepare a report and you can read it off yourself. Okay. Alia Ensa, what counter is this? Oh, did you read the December column? Yes, you'll be taken out in private. That's right. But at that time, it was listing in there when we did it was still 184. Yep. Okay, good training for Kwan. Okay. So these are the lists, and we just have our first list for January 03. And and by the time next year, this same time when we do it, we're going to be looking at the 12 stocks that we'll be studying and look at the return so far. Okay, so that's partly why we do our Friday Chart Clinic as an educational program to really educate it. Gas Malaysia is not doing very well. Well, it depends how you look at it. Right? If you look at it from stock price, it is. But you look at it from the investment standpoint, with the returns, it hasn't done that bad. Okay. Because remember, it does pay a slight dividend too, receive, right? 5%. Yeah. So that's why, depending how you look at it. Now, Henry, are you a premium members? Yeah. Henry, are you a premium members? I think you are, right? Can you reply me, Henry Ho? Oh, okay. Now that explains why. Okay. Because a lot of our premium members in here, we've been talking about it. So that's why I really encourage people to consider becoming a fraternity of our thing, so you can really get updated. But then again, as a like member, you're getting piece and pieces of in there, so the picture is not complete. And I can understand why you said that. Okay. And we have this in our portfolio actually for the Gas Malaysia. Okay, so that completes what I want to say on the side in here. Now I'm just going to be doing some stocks. This was the list submitted to me. The first one will be Gas Malaysia don't have at least 2 years. No, but they do be yes, can non-members join? Oh yes, you meet Traders Club meeting coming January. Can non-members join? Yes, why not? Okay. Okay. Come tomorrow. Okay. 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 So we will be doing the Al-Sawit now. Okay, the first one we'll be looking at is Al-Sawit. Okay, well, Al-Sawit is really nice. It's really fallen out. There's a recovery in the price. You got ultra high volume in here. Looks like this market is going to move sideways. It's very similar to the Notion VTech. I think you all heard about that company, right? When it fell and there's a big fire came out. So the market's going to move sideways for the time being. It's not going to go anywhere. Okay, Moonda. Next shares we're going to look at is Moonda. I'll go through very quickly. Moonda looks good. You got low volume test coming in here. You have a nice 18-day line change. I think this one will move. Thank you very much on David. This is a good one. Okay. Now remember, it has to break the 375 to go higher. Else it's just going to congest. Put your stop loss at 355. Okay. Next one will be Callme. Okay. Okay, Callme, hey, not too bad too. You got low volume test. Again, there's a possibility of this market just congesting on a sideways market here, right here and here. So you need to break out from the 40 cent. Again, Callme, it's a horrible company. I wouldn't even touch it with a 10-foot pole, right, Bill? Yeah, don't even invest in this kind of company, Callme. Right? If you look at this list here and you want to make the kind of return, just go back to looking this kind of list that pays dividend. Okay. Okay, next one we have is MRCB. Okay. Well, MRCB again, moving sideways. It looks like it's accumulation. It doesn't have anything yet. Now, if you run your magic scanner and look at MRCB, let's do that for as an exercise. Okay, I'm just going to run my magic scanner here and look for MRCB and see what it tells me actually. Okay. MRCB, search. Okay, maybe Malaysian. Malaysian, what's that? MRCB stand for what? What's the code for MRCB? Let me just check the code first. For MRCB is 1651. Okay, I'll just go over to the magic scanner. I'll move to the right, 1651. So, but I have it now here. So I have 1651. Okay, search. There you go. That's a MRCB. Okay, it has a PE of 38. Wow. And Kwan will tell you about companies with 38 PE and almost doesn't pay any dividend. And I'll look at the debt. So doesn't tell you a lot about the healthiness of the company anyway. Okay, so I would avoid it. Can you give your view on Multico? Got hammer up, and TSH, look at distribution bar. Yeah, we got a few more coming up. Well, we are a bit short of time. I'll just cover Multico. What's the code for Multico? Pixie, give me a minute because I need to find that. I'll do the TSH first because that's easy. Yeah, TSH is nice, you know, you're looking to break up, but volume is low. It's not going to break up this 200 moving average. Now remember, TSH is a commodity base, which is on palm oil. So make sure palm oils break higher, but I'll give you an update this evening on the closing bell. Okay? Multico, okay, thanks. 7004. Ah, very nice. This one, Multico. Now this is a Chinese stock. Yeah, now look for it to, if you have bought it somewhere around here, what price did you buy it, Soon? What price did you buy this? If you bought the price around 150, 155, then your chance of making money is going to be tough because you got an overhead resistance over here. Okay. Yeah, I think so. Beginning 159. Ah, why yo? Problem lah. Right, if you bought it at 135, then it's okay, but 159, market's going to be pulling sideways. You got the overhead resistance in here, volumes coming in. You got very little edge. Just be careful if it breaks back to 150. Okay, you got to get in at 135, not now. All right, that's the key point. Okay, mass. Let's look at mass. No edge right now. If you buy it, you got to be holding it. Overall fundamentals not that good. I don't see any sign that this will go higher. You probably have your money stuck in there. Stick to the high dividend shares. Okay, one last one. Potasco. Oh, okay. Potasco. Let's look at Potasco. Potasco is 50.70. This one I don't think can move with it. This one looks like it's stuck there, man. It's not going to go anywhere. Okay, RHB cap breakout, good. Get in then. Okay, for RHB cap, this one looks like it's going to be stuck. I don't see much help. Volumes are diminishing now. Peter, if you have learned volume spread analysis, if you have come to our course, you would know, you would immediately avoid this kind of shares. Okay, that's one of the key points too. Okay, with that we'll end our session now for our Friday chart clinic, and I'll see you, some of you, the premium members, tomorrow at our office at 10 o'clock. We will be talk more about investment, yeah, just like what I wrote on my January 2013 about live investment trading. Okay, with that, see you all. See you tomorrow. Bye bye.